Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. We had some interesting data out in Australia today where we saw inflation expectations again spike to the upside to 5.6%. That's not the kind of number the Reserve Bank of Australia would be wanting to see. It's a bit of a jump from the previous 5.2% number. We haven't been as high as 6.7, so it's a little bit better than the worst case, but still very, very high because really that number should be closer to 3%, at least below 4%, for the Reserve Bank to be feeling at all relieved about the inflation outlook. So still a lot of pipeline pressures to come through to the upside for the inflation numbers in Australia. And we are by no means out of the woods yet on that front. So the Reserve Bank of Australia will be hiking by 25 points for the next several months. There'll be no change there. They're not one for quick thinking, and once they're on a track, they tend to stay on that track no matter what happens, unless they're told to do something different by the Federal Reserve, of course. So for the moment, 25-point rate hikes from the RBA. The other slightly economic softening data was the employment numbers for today, where really it was about part-time employment falling rather sharply, driving the the unemployment rate up to 3.5%. And the previous unemployment number was revised higher as well to the same number. So things not as good on the employment front as perhaps people had thought. What is interesting is the participation rate is sort of fluctuating around the same level, but there are signs that employment has peaked. Now, let's face it, 3.4, 3.5%, that's just off the lows that we saw, and it does represent full employment in the Australian scenario. No backpackers, no travellers. Of course, we had full employment in Australia. The travelling situation has played similar havoc with the employment data all around the world. But Australia seems to be in the grip now of a slightly softening economy where people are perhaps beginning to lay off casual staff. And whether that begins to bite in full-time employment, which actually rose a little bit, remains to be seen. But certainly these are not good numbers for the RBA. I guess the employment number still does allow the Reserve Bank to continue hiking without a conscience, which is certainly its game plan. And that a lot of people see that as good for the Australian dollar. A lot of people see the unemployment rising as a reason to buy the equity market because they think the RBA will stop hiking. No, inflation is still too high, and the employment number is nothing to really worry about at those sorts of levels. It's still near full employment, so the Reserve Bank will actually continue to hike rates. So that would not be a reason for buying Australian equities on the day, although some people believe it to be the case. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.